Good morning. So why is the housing market going to go higher and higher? Stick around for the video and I'll get into that and explain some reasons why. Good morning. Today is Friday, December 1st. I hope you're all doing well. Out for a morning walk, which I do almost every day. Um, that being said, I'm going to get into why I think the housing market's going to continue to go higher. But before I get into that and before I forget, if you haven't already, do me a favor and subscribe to the channel. Hit that like button if you have a second. It only takes a second to just punch that button real quick. I really appreciate the support. It helps YouTube's algorithm, and it helps other people find the channel as well. So I really appreciate that. The other thing, I'm going to put a couple links in the description for opening an account at SoFi. If you listen to my other videos, not only do I use SoFi myself, I also own some of their stock. I think it's a good company. I think they have some room for growth. And I do a lot of discussions about stocks, not just housing as well. If you use the link and you deposit $10 or more, they're going to give you a free $25. They're also going to give an account that I opened with my 13-year-old son a gift. Super cool, and I really appreciate that. I try to teach him about investing as well, and he gets excited, and it's an excuse for me to talk about some of this with him. So not only do I post content, I listen to a lot of the people on YouTube as well, and I like a lot of them, even the ones I disagree with. But I'll make comments from time to time and talk about the things I see differently. Sometimes they respond, sometimes other people. I kind of got blasted recently by one when I said I felt like the market was going higher, and he started going into what's your data points and what's this and what's that. Now, I'll get real quick into my usual comment and my disclosure of you guys need to do your own research. It's okay if you disagree with me. In fact, I don't think you should follow my lead just because it's what I think. I think you need to make your own financial decisions and do your own research and make those decisions for yourself. I'm just sharing the information that I've learned for me over the past few years. And if it doesn't fit you, that's great. I got no issue with that. You use this information for entertainment purposes and hopefully you enjoy what I'm talking about. But I think the housing market's going to continue higher, and I got a lot of reasons why. One of the main ones is the loans that are in place and the people who own the homes right now. The ones in the houses have super low interest rates, and the people who are qualifying to purchase now, they're extremely well qualified. They have good credit, they're putting good down payments down, they have good secure jobs that pay well as well. Um, and I just don't see a reason they'll default unless we have a big amount of unemployment start happening because the Fed just pushes and pushes. But they've kind of made it clear, especially since CPI came out and it was softer than expected. And I picture that continuing. I mean, you've already seen the bonds correct a good amount, but they've made it clear their goal is not to crash the economy. They're trying to slow it down, and we're already seeing signs of that happening. I think the data is delayed. I think we're going to see that continue into next year, and I think the timing is going to be great for when the election comes around. Is I think both parties are going to want to see a stronger economy. I think if we start to slow, Fed will be able to lower rates. The other thing going on is that the spread between the 10-year and where mortgages are is pretty extreme in compared to what it usually is. So if you want to know where mortgage rates are, just as a generality, typically they're about 2% higher than where the 10-year is. Now that's not an exact quote, that's an estimate and just a guide to be able to use for people. But they've expanded to 3% and even a little bit more at times now that there's been talk that inflation's an issue and the Fed's been raising rates. Well, as that starts to settle down, not only do I think the Fed is able to start reversing course, but I think that spread comes in a bit so that you have both start making things come in line better. When the rates come down, I picture the prices going back up. Honestly, I think right now is a great opportunity to buy. And those of you who know that I'm a lender and think that that's some self-serving comment, I got to tell you, it's the total opposite. As a lender and as for business, there would be nothing better for me than the market to collapse. I mean, if the prices really dropped a bunch, what do you think would happen at my business? There's a bunch of people on the sidelines looking to buy. So I have no reason to say I think the market's going to go higher, other than that's what I actually think. I think when you see the rates do better, people feel more comfortable buying the houses, and you're going to see the prices go up because there's not a ton of inventory. And then the big difference, the one that people keep forgetting about, like, first of all, I don't really care about the Airbnbs. That's not a large percentage of the housing market, and people will figure out other solutions. You might have some come to the market, but it's not like we're going to have a barrage of homes come to the market because Airbnb laws change. On top of that, those people can afford the houses too. It's just a financial decision. It's not a bunch of market collapsing type of stuff like it's tried to sold as. But don't forget about the different loans. There were so many different aspects that is just so different this time. The option arm does not exist anymore. And the bigger part about the option arm is not just the fact that it matured at, well, seasoned after somewhere between 3 and 5 years, and people's payments doubled, tripled, and quadrupled, but they also were allowed to do stated income and stated assets, meaning you walk into the loan officer, and you could qualify with like a 580 credit score back then as well. The loan officers did not have to pass any classes or learn anything about what they were doing, which has also changed. But you could walk in and say, I make $500,000 a year. You didn't have to provide any documents to prove it. You didn't have to do anything. It was called stated income. You could do the same with your assets. That is not allowed anymore. You have to show your documents, prove your income. We have to run credit. We have to collect documents to show the assets. Here in Vegas, they have laws about ability to repay, meaning you have to make enough money to cover the costs of those loans. It's a big difference. And then take out of the equation the option arm that seasoned and caught people off guard. I'm not really sure why people think the market's going to go lower, other than they feel like it's gone up too much, and they point to the earnings versus the cost of the home. Well, I don't think you're going to see that really change a whole lot, other than small corrections, because if you look across the country and look at where it's gotten expensive, I think there's good reasons as to why it's gotten expensive. One, those places were undervalued. And two, now they've just come into line with where they should be. Maybe they went a little too far, but it's not going to be a lot. And I think you're going to end up seeing more multi-generational living type of arrangements. Kids are going to move in with their parents like they do in other countries. The cost of building homes has gone up, whether that's interest rates or if rates come down and you see building supplies and labor go up. So if it costs more to build a house and there's a lack of inventory, what's the reason that prices would come down? Simply because Airbnbers are going to start panicking and selling, or people who have 3 and 4% interest rates all of a sudden are going to have some reason to panic? I don't see it that way. I really don't. I picture a lack of inventory like there is now. Rates probably coming back down next year, kind of where the CME predicts it, as well as the spread between the 10-year and the mortgage rates. And then I see prices going right up again, catching people off guard, scratching their heads as to why. You know, generally markets have this saying of climbing a wall of worry. Well, I don't see FOMO. I see a bunch of people nervous saying it can't go higher, which is what I would call a wall of worry. You guys can call it FOMO, but I can tell you my clients are really nervous and careful and don't bite off more than they can chew. I also hear about all of these lenders suggestion arms. Why? If you have a lender who's been suggesting an arm when the yield is inverted, it just wouldn't make any sense. I mean, odds are An ARM is going to have a worse rate than a 30-year fixed right now. Like, I'm not looking at pricing, I don't know, but the way that the mortgage works, if a 2-year treasury right now has a higher interest rate than a 10-year, well, the ARM's going to be based off of the shorter term treasury. So it's going to be inverted as well. It's hard for me to believe there's a bunch of lenders out there suggesting ARMs right now. I think that's a YouTube comment from people who don't really know and just have this opinion that there's some crazy lending that's been going on. There hasn't. Even all the other ones like the debt servicings and the bank statement programs, as opposed to last time, these are not stated income. These require bank statements to show the deposits over a year's time, usually, if not two, to be able to document that the person has enough coming in, because it's possible they have a good accountant and a system where they're able to write off a lot of money. They also require rather sizable down payments usually, as well as good credit. And then there's a higher interest rate on those loans to offset the risk that the lender is taking. So you would hope that a person who's using those understands them and understands they're paying a higher rate, which at least my clients always do. And there's a reason that they're doing that. So I think you have to listen to everybody, make your own decision. But what I see happening is this is going to be the best opportunity you're going to see in the next, 5 years. Maybe the prices don't shoot up, but I don't really see them getting better. I do see them slowly drifting higher again. Again, do me a favor, give that thumbs up. It only takes a second. And if you haven't, hit the subscribe button. By all means, I like the conversations. Even the guy who didn't agree with me, I still don't mind talking about it and arguing it out. I'm really opening to hearing other sides of things. But in this instance, I just don't really agree.